So as you guys probably know at this point, the banks kicked off earnings season last week. We had JP Morgan, Bank of America, Wells Fargo, who else? Citigroup, I believe, BlackRock as well, and maybe a couple other ones that I'm forgetting. And this week, we have even more companies. We have, I think, Goldman Sachs. Let me see the list of companies that we're going to talk about today. Morgan Stanley and a bunch of other companies, not necessarily all banks because a lot of the big banks already reported, but now we're moving on from the banks and we're seeing some tech companies report, more airlines. So we have a lot to talk about in this video, and all I ask from you is, if you find value, to hit that like button and of course to make sure to subscribe. And with that being said, guys, let's just dive into the video. So like I said, we had JP Morgan, Bank of America, all these companies, and mind you, all of them, all their stocks went up for the most part, if I remember correctly. JP Morgan went up 2.5%. We hit a new high on the 4-hour chart on Friday after they reported. Wells Fargo ended up, let's see here, it didn't hit a new high like JP Morgan, but still it went up over 3%. We had Bank of America on the day go up, let's see here, over 2%. And we saw, what was the other one? Citigroup, I believe. Yeah, ticker symbol C. This one up over 1.6%. Now it's testing a multi-month resistance. So a lot of these stocks, guys, are doing very well. And moving on to the ones this week, we have Goldman Sachs, which is one that I'm looking at very heavily right now because it broke out of highs from the middle of August. Those highs were right around 355 to 7 roughly. Now we're over 370. I mean, look at this. It went up over 1% on Friday. So Goldman Sachs is breaking out of the highs not only from a couple months ago, right? But now if we zoom in a little bit, we're taking the highs out from the middle of December, which is great. Those highs were right around 368 to about 370. We're breaking out of that point, and now, mind you guys, we're also above the moving averages on the 4-hour chart. So Goldman Sachs, to me, looks like it wants to break out towards the highs here on the 4-hour, being about 389 to about 390. And let me see, what's the all-time high on Goldman Sachs? Something in the 400s, I believe, right? 426 back in November of 2021 is when that all-time high was hit. So actually over 2 years ago, 2 years prior to me filming this video. So let's see what the projections are for Goldman Sachs. They're looking to do EPS of $5.48. And mind you guys, these are all projections. So who knows what the numbers are actually going to come in at. But Goldman Sachs is looking to do, like I said, $5.48 in EPS on revenue of $10.83 billion, which would be down over 14% year over year. So keep that in mind. Goldman Sachs, their numbers, their revenue is going to be going down most likely, unless they pull some stellar quarter out there, you know what, which is probably most likely not going to happen. So yeah, keep your eyes on that. It's already breaking out, which is nice. But on the flip side of that, to play devil's advocate, it's setting itself up for a potential dump if earnings don't come in and impress investors. I mean, because again, the stock is already up a good amount over the past couple of just days in general. It's up 10%. So for earnings, for it to go up even more, earnings have to be great. And it's going to be tough to see how they end up, actually coming in, or maybe the run-up already happened, in other words, right? So let's see. Earnings are on the 17th before the market. That is on Tuesday, guys. And again, Monday, the market is closed. Keep that in mind. So on Tuesday, we have Goldman Sachs. We also have Morgan Stanley. Let me pull that up. MS is the ticker on this. And Morgan Stanley right now, as I'm making this video, guys, is at a multi-month high. Or rather, a multi-month resistance. It might be at a multi-month high if it could break out of this point. But we're now testing 92 to about 92.50. That has been resistance since the middle of August, you guys can see. And since the middle of August, we've been putting in higher lows, pretty much every couple of months. You guys see that. So in other words, if I pull up this, this trend line tool, you guys are going to see, in other words, we are in an ascending triangle right now, and we're testing the top of it. If this thing breaks 92 to 93, on a good earnings report, or maybe just banks continue the rally overall as, a sector, this could end up taking that point out. If it does, there could be a lot more upside. Mark is at or above $92 is where I'm putting my alert here on Morgan Stanley. If I pull the 3-year chart up, guys, and zoom in a little bit, you're going to see, this thing could be going towards 100, 105, 110. That's where it could be going next, on a breakout. So Morgan Stanley's looking to do EPS of $1.19 on revenue of $12, or not $12, revenue of $12, guys. Yeah, Morgan Stanley, $12 revenue, $12.64 billion of revenue, which would be down about 13% year over year. So expect Morgan Stanley and Goldman Sachs' revenue to be down a decent chunk year over year. And again, keep your eyes on that level for Morgan Stanley here. Very, very big. Low to mid 90s is going to be a very big spot moving forward here for this particular company. So we also have UAL reporting this week, and mind you, all these are on Tuesday, the ones that we've talked about thus far. Then we're going to see some that are obviously later in the week. So look at this. Oh my God, what is going on here? UAL just went in a straight line the past couple of days from $36 to $51 a share. That is insane. Am I missing something here? What's going on here? This went up 40% in 9 days. There's got to be something that I'm missing at this point. But wow, that's intense. So yeah, so that ran up a ton, which makes things complicated now that we're getting into these earnings, which is crazy. So earnings is that because? Anyway, we'll dig deeper into the UAL thing. Earnings are on the 18th, which I believe is on, what is that? Is that on Wednesday? So yeah, they're on Wednesday. They're looking to do EPS of $2.10 on revenue of $12.23 billion, which would be up almost 50% year over year. Yeah, pretty crazy year over year numbers, as these airlines are still bouncing back from COVID. As you guys know, they got derailed during COVID. So UAL, which is, I mean, at this point, guys, gosh, this is going to be tough because earnings are coming up and it's already up 40% in the past 10 days. For this to go up even more, I mean, I'm not betting on that. So for me, I'm just going to see how it goes, right? If it pulls back to the mid 40s, awesome. Maybe we could get a little dip there, maybe even the low 40s. But here at over $50, it's up 40% in 9-10 days, guys, with earnings. Earnings have to be amazing for this to go up even more. So keep that in mind. It's a little bit, UAL's in a tricky spot. Let's put it that way. We also have this week IBKR. Let me pull that up. Interactive Brokers. You guys probably know this one. It went up over 3% on Friday. Excuse me, guys. I don't have my water here, which is probably not good. But it's right there, 10 feet away from me, but it's actually empty. So that's even worse. So I'm going to have to go fill that water up. That's the sucky thing about being away from home, guys. You don't have your usual setup. Now I have to go all the way down to the hotel lobby to fill the water up, or the gym or something like that. Whatever. We'll figure it out. It's not the end of the world, obviously. So IBKR, keep your eyes on this. I mean, this has really been turning better for the bulls the past couple of days. You guys can see higher lows have been made for months, and really, if we zoom in on the past couple of days, we put this, I don't want to say it's the bottom, but we put this higher low here at $68, and since that point, that was in the middle of December. This thing has not. I mean, it's been doing well ever since. In other words, it's been crushing it. We broke over the moving averages even last week. We closed very very strongly. There I go again, choking on the camera, guys. We can see this ran all the way. Actually, took the highs out from earlier last week. So it closed on a very great, bullish note there. And at this point, we have clear levels coming up of resistance that are pretty far away from where we are. Well, maybe not pretty far, but a ways to go. At $80, $81, and this is at currently 77. So there could be more upside, 3, 4, 5% more upside as this tries to fill the gap to the highs from November, pretty much all of November. So Interactive Brokers, watch out for them. They're reporting this week on the 17th or 18th? 17th, which is on Tuesday after the bell. They're looking to do EPS of $1.17 on revenue of $896 million, which would be up roughly 31%. And again, I can't stress this enough. All these numbers that we're talking about today, these are all estimates, guys. Who knows what the numbers are going to come in? These are all estimates from a bunch of different analysts that I got on Yahoo Finance. So keep that in mind. Keep that in mind. But either way, it's they're looking to grow pretty nicely, 30%, and again, UAL close to 50% year over year. Let's see what else here. We have Charles Schwab, which I always mess up this ticker symbol. It's SCHW, SCHW. Yeah, that's what it is. And this stock's been crushing it. I mean, look at this thing. It was at $59 back in June. It almost hit 90. I mean, this thing has been on fire. Earnings are coming out on the 18th, Wednesday, before the market opens, and they're looking to do $1.09 in EPS on revenue of $5.57 billion, which would be up 18, almost 19% year over year. So not bad at all for Charles Schwab, and it's actually setting up pretty nicely. It got a bit overbought, hit 86.60. Now we're down to 83. We've pulled back about 4 or 5-ish%, not even 5%, more like 4. And it looks like we're holding the uptrend. So maybe we do get a pop off these moving averages if these earnings are good. Let's see. And again, they're on Wednesday morning, which is early in the week. So we'll see how it plays out throughout the course of the week, So the next stock here is DFS, which is Discover Financial Services. You guys probably know Discover, right? This is at a multi-month resistance right now. It's testing it right now. Well, maybe not right now in real time, but, it's, in the middle of January, roughly, it's testing 105, 110, which you guys can see. We have not gotten out of that point for a long time, since May, June of last year. So with earnings coming up here on Wednesday or Thursday, actually, it says here on the 19th in the morning, they're looking to do EPS of $3.65 on revenue of $3.66 billion, up 25% year over year. Let's see if that could end up catapulting this stock out of 110 once and for all. Maybe this is it, guys. So I'm going to set my alert a little bit above 110 at 111. We'll see what it does at that point. If it could take that out and we pull up the 3-year, we're talking, Discover Financial Services could be running towards, 120. These are some gaps to the upside here. 120, 130. You guys see these levels, right? The all-time high looks like is 135. So, yeah, DFS, keep your eyes on it for this week, guys. I for sure am. And later in the week, we have 2 other companies I want to talk about. One of them is Procter & Gamble, ticker symbol PG. They're on, let's see here, what day are they reporting? They're on the 19th. They're looking to do, let's pull this up, about $1.59 in EPS on revenue of $20.67 billion, which would be down about 1%, a little over 1% year over year. So don't expect anything crazy, anything wild on Procter & Gamble's numbers. They're going to be down. But, this is one that's on Thursday that for sure is worth watching. Consumer staples companies, guys, at this point offer a lot of safety, because of the products that they sell. Think about what Procter & Gamble sells. I mean, not everything that you have in your house. I'm exaggerating. But I guarantee you guys, you have at least one Procter & Gamble product in your house. I mean, most people do. And it's one of those companies that it's a little bit frothy in valuation because everybody flooded to it in 2022. It was a flood to safety stock, if you will. So I want to see how these numbers do, or, these numbers are, and how the stock performs. Very important. And of course, another one here we have is Netflix, which will wrap the video off with Netflix. And before we actually get into it, if you guys haven't gotten your free stocks yet, I don't know what you're doing. Use those links down below. You can get up to 15 stocks from Moomoo, each up to $2,000 with at least $100 deposited. And you could also get up to 12 stocks from Webull with any amount deposited. All those are linked down below, or you can go to stocksurfest.com/Moomoo, stocksurfest.com/Webull, whatever is easier for you, and you get some free stocks, guys, free money, and it also helps out the channel. It's a win-win. I appreciate you all, as always, for tuning in and supporting, and that's a great way that you get free money and also support the channel. So, yeah, Netflix at this point is at a fresh 4-hour high. As of Friday, we hit $336.65, which is very good if we're looking at these charts, because on the 3-year chart, guys, let me zoom in and show you this. We are now entering the next range, which is between $335, $340 to about $400. It goes all the way up to $400, which you guys can see here back. And I've talked about this before, but if you guys haven't seen me talk about it, back in January of 2022 throughout April of 2022, we traded between 330 and 400, right? And then we failed all the way down to 162. Now we're back pushing 330. We're in this window again. So in other words, I could see Netflix, if it breaks out on great earnings, guys, this thing could be going towards 400 at some point, not too far away. At least that's my prediction, in my opinion, based on how these earnings look. I mean, I don't like gambling on earnings. You guys know that. So I'm going to wait and see how the earnings look, and we'll see how it goes from there. They're looking to do 44 cents of earnings per share on revenue of $7.82 billion, which would be up 1.5% year over year. So, yeah, I mean, Netflix, I'm looking at this as a technical play for sure. It's about to break out, in my opinion. We just have to wait and see the confirmation. Wait for the confirmation. So I'm going to set my alert at 340. Let's see what these numbers are looking like. Later on in the week is when they're coming out. I'm pumped about it. So if you guys found value in this video, you know what to do. Hit that like button. Make sure to subscribe as well. And if you didn't know, I have a second channel called Stas Talks Money, where we talk more about general finance, personal finance. I go after some, the big finance guys like Dave Ramsey. I have a couple videos on Dave Ramsey talking crap, not in a bad way, but just criticizing what I just, don't agree with, what Dave Ramsey talks about. So if you want to see that type of content, more content like that coming soon on Stas Talks Money, make sure to go subscribe there. And don't forget to use all those links down below. I appreciate you guys as always. And with that being said, I'll catch you in the next video. Peace out.